Hello, beautiful people, and welcome to My Money, Your Money, where we talk about all things money with the goal of closing the racial wealth gap. In today's show, along with our guest, Teri Williams, President and COO of OneUnited Bank, we're going to talk about the safety of consumer bank deposits in light of recent turmoil in the banking sector. We are generously supported by our sponsors today, Demesman and Dover Accident Attorneys, the AARP, Palm Beach Solid Waste Authority, and FAMU Mary. I am your host, Brigette Lumpkins. I earned an MBA from Wharton, and I've worked at firms such as Goldman Sachs and Lehman Brothers, covering private and institutional clients, as well as raising capital for investment funds. Without further ado, I want to welcome Teri. But first, I want to tell you a little bit more about her. So she has graciously joined us again. This is not her first time to My Money, Your Money, to shed some light on what some of you may have seen happening in the banking sector in the last few weeks. She's president and COO of OneUnited Bank, as I mentioned, which is the largest Black-owned bank in the country, where she's responsible for strategic initiatives and day-to-day operations. Prior to OneUnited Bank, Teri distinguished herself professionally at both Bank of America and American Express. She's an alumna of Harvard University's MBA program and graduated with honors with a degree in economics from Brown University. Thank you so much for joining us. Really appreciate you coming back.
Well, thank you for having me, Brigette.
So before we get started on the meat of the discussion, I want to make sure I didn't miss any highlights in your bio.
No, I think you caught them all.
Okay, and a fellow podcast lover, I should say,
yes,
right?
Yes.
So for our audience, the last few weeks have been volatile in the global banking sector, and it was kicked off by a relatively small but high-profile publicly traded institution called Silicon Valley Bank, or SVB, and disclosures they made that essentially spooked the internet and essentially led to a bank run, which is when everyone calls the bank to withdraw their money kind of at the same time. And within a day, the government intervened to close the bank and protect consumer deposits, but it was a nail biter affecting other banks for a while there. And so eventually we did see contagion internationally with trouble at institutions like Credit Suisse, which was bailed out by the Swiss government and eventually got an offer to be purchased by UBS for a huge discount to their market value before that. So Teri, can you summarize in English for our audience what went wrong at SVB with respect to their ability to satisfy customer withdrawals?
Well, first I want to say to your audience that they should sleep well at night, that their money is actually protected, and that they shouldn't worry about the safety of their deposits. The SVB was a very different bank than most banks. SVB catered to a lot of technology companies and startups, and they had an average deposit. Their depositors had an average deposit of $4 million.
Wow.
So these were high net worth individuals that left their money in the bank. And most people don't have average deposits of $4 million. And in fact, most deposits are FDIC insured because they are, $250,000 or below. And by the way, if you have a joint account, you can actually be insured for $500,000. So, for most of us, our deposits are FDIC insured. But for SVB, they had a lot of depositors whose money was not insured. And when they became concerned about the bank, they started to withdraw their money.
Right. Now, so I just want to double click on that really quickly, because not everybody knows what the FDIC is. And the FDIC is the Federal Deposit Insurance Corporation, and they're the agency that is the insurance provider for U.S. consumer deposits up to $250,000 for an individual account.
Correct. And I'm glad you clarified that, because you're right. A lot of people don't know, who the FDIC is. It is a government agency. And as a bank, you are a member of the FDIC, which means that the FDIC regulates you. FDIC comes into banks to make sure that they're sort of managing the bank in a safe and sound manner. And they also, they do that in order to protect the depositors.
Right. I read a story about a Milwaukee Bucks player. I don't know if he's still with that team, Giannis and Tite. I know I totally mispronounced that, but he has 50 different accounts with $250,000 individually, which I thought was, well, that's one way to do it, to make sure that your millions of dollars are protected, because that's
Yeah.
$1
Well,
million.
there are, yeah, there are individuals and institutions that do that. There are also other ways that you can get FDIC insurance, but you really should not have, you know, more than the $250,000 in any one bank, or, you know, again, half a million if it's a joint account.
Right.
Um, and I, you know, what I'd also say is that in addition to the fact that SVB's average balances were high, you know, all of their depositors knew each other. You know, some of them had like $500 million in the bank. So I'm saying
Yeah.
average was 4,000. Some had, you know, $500 million in the bank.
Right.
So when
Yeah.
they all became concerned, they started to pull their money at once. And in one day, they withdrew $42 billion. And that was really when SVB just didn't have the cash. And when you don't have the cash, when someone asks for their money back, that's when you basically have failed.
So curious to get your opinion on this, because I read some things about SVB stating that, they were without a risk officer for several months, that they weren't really didn't have a realistic liquidity plan because they had bought these long dated government bonds to get a higher interest rate, but when interest rates rose, the value of those securities fell, and so they didn't have the liquidity or the ability to sell at the value they had planned, and that this was kind of like not really minding the store very correctly. But it seems to me like a $42 billion run would put any institution of their size at risk.
One of the things that I think it's helpful, most people don't understand, is that when banks receive deposits, they hold your money safely, but they do, you know, lend out money, and they also invest money. And that's how a bank makes money, is they take in deposits and then they lend it in loans, or they invest it in securities. And what we do is that we leave enough money, you know, so that if customers come and want their money, that we have enough cash to give them their money. And what SVB didn't do is to ensure that they had enough cash. But you're absolutely right. For most institutions, if they had a call for $42 billion, it would be very difficult for them to come up with that amount of cash in a short period of time.
Right.
But it does require, you know, risk management. They do. I'm sorry. No. They do. Sorry about that. Somebody just came in my office.
President problems. You're running a bank.
Yes, it does require risk management. It's something called asset liability management that every, you know, bank has. It's called the ALCO committee, to ensure that there's enough liquidity, that there's enough cash, there's enough access to cash. Because sometimes, you know, you need cash, or you need a way to bring funds into the bank in order to satisfy the deposit request that you receive. And they didn't do a very good job of managing that.
Right. So doubts about that are what sparked this whole.
And I think there's a certain amount of, you know, there was a certain amount of arrogance, maybe, certain
Yeah.
amount of comfort level that their customers weren't going to ask for their money, you know, so quickly, so immediately, and all at the same time.
Hmm.
Um, you know, most banks do not assume that. They assume that, you know, they have to manage the risk and be ready no matter what happens. So um, that this is a situation that is unlikely to happen in a black bank, as an example.
That's right.
I'm just saying, you know.
Right, right, right. We don't make those kinds of assumptions.
No,
And general most black banks probably don't have a $4 million average account size.
right, no.
It would be nice one day when we get this wealth gap closed. We'll get there
Yeah.
eventually.
Yeah.
So now if people are nervous, because I know that there's some people who get really, really freaked out about this, and I haven't, just as a finance professional, I haven't moved a dollar of any money anywhere,
Mhm,
just so
mhm,
that people know that, like, this is not something that um rose on my radar as a risk that was realistic for like 99.999% of people in this country. But
mhm,
for people who really want to know more and understand this better, if they're nervous about their bank taking on too much risk,
mhm,
what should they look for that's generally available in a simple internet search, or characteristics of an institution, or basic information available on a bank's website, to understand whether they're in putting their deposits in a riskier or a safer bank, right?
mhm,
In terms of how the bank is managing
mhm,
its assets and liabilities.
mhm. Well, first of all, and this is one of the reasons that I wanted to describe SVB, because they were so unique.
Mhm.
Banking in general is very, very secure. You do need to know that your bank is, or where you're leaving your money is FDIC insured. I mean, I'm going to use an
That's like number
example.
one.
That's
Number
number.
one, FDI insured.
Yes, exactly. So I'm going to use an example that is an app that's used by a lot of our community, which is Cash App.
Hmm.
Cash App is used by a lot of people in our community, and a lot of people have money in their Cash App account.
Hmm.
It's not FDIC insured. So I'm just going to give you that as an example.
Right.
So it is important for you to, and I'm not saying, okay, rush out and move your money out of Cash App, because a lot of people don't have a lot of money in Cash App. But you should know it's not FDIC insured.
Great example.
Um, a lot of people invested in crypto. It's another example, not FDIC insured. The stock market, not FDIC insured. That doesn't mean that you shouldn't invest in crypto or the stock market, or you shouldn't have money in Cash App, but it is important to know, whether or not where you have your money is FDIC insured. And
Um,
there is a place on the FDIC website where you can put in the name of your institution or even their website, and it will tell you whether or not it's FDIC insured. In fact, on our website, if you go to OneUnited, OneUnited.com/FDIC, there's an article that has links to that website where you
okay.
can go and put in you can put in a website address, or you can put in the name of, where you're holding your money, just to see, is it FDIC insured? And
Right.
if it is, you really do not need to worry. It doesn't matter how the bank is managed. Your money is safe. In
Right.
fact, I would not want people to be concerned about that, because you got too many other things to be. I prefer for you to be concerned about how you're going to make money, as opposed to, is my bank safe? And that's
Right.
why the FDIC insurance is there.
Right. And the FDIC is backed by the full faith and credit of the US government.
Absolutely. No one has ever lost any money in a bank if it's below the
That's right.
FDIC.
But if it's $250,001, that $1 could be at risk. So maybe open a second account for the $1. Okay, so can you tell us a little bit more about One United Bank, and sort of how you're helping your clients manage through the aftermath of COVID, and people, especially with people who are experiencing job loss and may not have income to um, meet their debt obligations, etc., how you were stepping in to help, and what suggestions you have for consumers
Mhm.
in this sort of turbulent, uncertain economic time.
Yeah. So, great question. In fact, even though I don't want you to worry about your money being safe, I do want everyone to be concerned about what's happening in the economy. That there is a reason to be concerned, that there is the possibility that we'll go into a recession. One of the outcomes of the SVB, sort of banking disruption, is that there's an expectation that banks are going to lend less. um, that, whether it's, lend less to companies or to individuals, there is a possibility of a contraction in the economy because of everything that's going on which could result in job loss. So, I do think it's important for us as a community to focus on our saving, to, be a little bit less likely to leave a job unless you completely hate it, because we tend to be, last hired, first fired. And
Tell
so
me about it.
if you've been in a job and you have some, seniority, or, you're doing well, and, you like the job, don't be so quick right now to go out and get a new job, because there could be some disruption in the economy.
Yeah.
For One United Bank, we recognize, one of the things that we do all the time is try to educate our customers and increase our financial knowledge and financial literacy, and try to say, it's important to know where the economy is going, not where it is today or where it was yesterday, but where is it going, so that you make better decisions. And so what I'm saying now is, there's definitely going to be a slowdown. And so be very careful about, maybe it's not the right time to be, taking a huge, purchase. Maybe it's not the right time to change jobs. And so education is important. And then education, and also trying to educate our community before stuff happens.
Right.
Important. The second is, we do have a lot of programs for people that, have experienced disruption. We have a second chance checking account for people that have check systems records. We have a secured card to help people rebuild their credit. We have a short-term small dollar loan program where you can get, up to $1,000 into your account within hours, at a reasonable interest rate. And I think our interest rate is like 20%, and to really stop our community from having to go and get a payday loan. So if you need quick money and, short term, we have it's called Cash Please. We have a program to help our community sort of get through, bumps in the road. We also have home loans. I'm here in Miami now with you, and we have home loans. And we're actually, really trying to, even though rates are higher, I want to say this, rates are higher. Everybody's, oh, rates are too high. They're actually not high in comparison to the history of mortgage rates.
Right.
So a 7% rate is still a good rate. It's not as, low as the 3% it was yesterday, but it's still a good rate, and prices are starting to come down. So it may be a good time to buy a home. So we try to figure out what we can do for our community to really help us through these difficult times.
I have talked about the rising interest rates vis-a-vis mortgages with lots of people, and the idea is that, especially if you're not in a situation where you're really under duress and you want to be opportunistic with respect to home prices, that you can often, refinance in a few years and get that loan down, because interest rates won't stay elevated indefinitely. Eventually, usually like the cycle is around 36 or so months.
Yeah.
So if you can endure that higher interest rate for that period of time, for a 30-year term, then you could refinance and find yourself in a great home,
right,
at a low interest rate even.
Right. In fact, I would say, when interest rates were 3%, but the home that you wanted to buy was, 400,000, 600,000, or whatever, you might be better off today with a higher interest rate, but a lower home price.
Right.
Because you can refinance in the future. Whereas if you've paid that higher price, you're stuck with it for the life of the home. Yeah.
That's right. You're stuck with it. And there's also variable rate mortgages, which people aren't happy with now, but could get great if you started with one and then ended up in a lower rate one, where that automatically sort of resets for you. That's great. We have, thanks, Michelle. One United Bank does wonderful work in the community. Are you partnering with any local in the communities where you operate? Because I know you're not just a South Florida-based bank, you're also in LA. And can you talk a little bit about your community initiatives?
Yeah. So we like to partner with organizations that are focused on, building wealth in our community. So we love, legacy, because that's one of the things that, that Dexter celebrates, and love the show for that reason. But whether it's the Miami-Dade Chamber, I'm also on the board of the 79th Street Corridor Initiative. Our
Okay.
focus, we're located on 79th Street, and our focus is on building wealth for, Liberty City, Brownsville, Little Haiti, and communities that are on the 79th Street corridor from, about 62nd up to 87th. So we try to get involved in organizations. Girl Power. I was just at a great event for Girl Power
Mhm.
that's really helping young girls and educating them about life. So we try to focus our contribution dollars locally. I mean, we do some national stuff as well, but really in Boston, Miami, and LA is where we try to really partner and focus on our on contributions.
Got it. Got it. Okay, so I have one final question for you before we wrap up. So, as a bank president, the last month or so, how much sleep have you gotten?
Uh, Oh, so I get good sleep. I will say that. I'm a very good sleeper, and I also walk. I try to do it every morning, and then go to the office because I don't get to exercise. At the end of the day, I'm usually working late.
Sure.
Um, but I definitely think the exercise helps with my sleep.
Yeah,
Um,
for sure.
yeah, I think, the past couple of weeks, it's not that I've lost sleep. In fact, you'll see the article says you can sleep like a baby because
Right.
your money is safe. So it's not that I've lost sleep, but I'm more concerned that people are needlessly concerned,
Hmm.
because of SVB, and that just getting the word out that you really should not be concerned about your money is important to me. And so it's not that I've lost sleep over it, but I'm concerned that some people may be losing sleep over it, and I don't want that to happen.
That's right. That's right. So to summarize, there was fairly unique concentrated risk at or localized risk at SVB, which was a unique situation. And like many situations, I mean, I was at Lehman when Lehman went bankrupt. So I know the power of innuendo. Although there was a there with Lehman, there
Yeah,
was a lot of stuff that wasn't there that sort of reverberated after
yeah,
Lehman took its tumble and fall. And so in this particular case, it seems like the authorities have like stepped in and really clamped down on that before it got too bad. And also should note that all the depositors at SVB are being made whole.
yeah,
And so they are going to be able to get their money.
yes,
And that's the good news about this, because whether it's $4 million or $4,000, if that's your money, that's your money. And
exactly.
so the system has worked in this case, where maybe their risk management was lacking, or they got caught, sort of out there, or internet, zeitgeist, like a rumor got started and it just went viral, right? Because this was really like this happened like on a Slack channel,
Yeah,
essentially,
yeah,
right? Where people got like very agitated in a very small thing and caused this big thing to happen, at a very well respected institution, but that had taken its eye off the ball. So, but the vast majority of us mortals don't
mhm,
really have to worry about that with our FDIC insured
right.
deposits.
And I also want to say that the bank wasn't bailed out, in the sort of the old sense of the word.
Sure.
That banks, that we pay into a fund, um,
Mhm.
and that fund is being used to ensure that the depositors are made whole, and that
Mhm.
the bank is transitioned. It's actually been bought already by
Yeah,
another bank.
yeah.
So there weren't any, people are concerned about taxpayer dollars that are being used, but that's not the case in this instance. It
Right.
actually was it's been a very smooth process.
Yeah, no, it's been impressive, especially compared with how chaotic it was back in 2008
Yeah.
and 2009. Although taxpayers got their money back then too, with
Yes,
interest.
we did. They actually,
With interest. But most people don't really know how that works
no,
because
yes,
they got agitated by the bailout, but it was a loan. They were
yeah,
loans.
it was. And people
They
got,
got
yes,
money back.
taxpayers got more than their money back. Yes,
They got more than their money back then, and the depositors have gotten their money back now, and so I feel good. I have not lost a wink of sleep about my deposits
did.
at the various banks, including OneUnited Bank, where I am a customer with
Thank you.
some not insignificant change, but not $4 million um, on deposit, but like certainly an amount that I would notice if it disappeared. So thank you so much for joining us.
Yeah,
I
thank you.
really appreciate it, and for adding your insights for our viewers tonight. Please watch our other MIA Media Group shows. Monday, The Business of Black Business with Jay Reynolds at 1 p.m. Tuesday, My Money, Your Money at 7 p.m. with yours truly, Brigette Lumpkins. Wednesday, Soul at 7 p.m. with Nikki Gellin. Thursdays, Lunch with Legacy Leaders with Anne-Marie Sorrell at noon. And The Flavor of South Florida at 7 p.m. with the legendary chef Irie. And Fridays at 2 p.m. with Dr. Michelle Corwan, we have Black Health. Thank you so much for joining us, and let's work together to close that gap.